You don't need to be rich to start investing, and you don't need to wait until you've saved thousands. In fact, the best investors start small, but they start early. So if you're asking yourself, how much money do I need to start investing? The answer is simpler than you think. Let's discuss. Most people think that investing is only for the wealthy, but that's a myth. The real secret to building wealth isn't a big paycheck, it's consistency and time. In fact, you can start with as little as $100 a month. You heard correct, just $100. That's probably less than your monthly coffee or food delivery bill. And if you start early, that small amount can snowball into something massive. In fact, don't wait to invest more money. Start investing sooner so you have more time instead. Now let me show you what that actually looks like. Let's take a real world example. Say you invested $100 a month into something like the Dow Jones Industrial Average, which historically returns about 7% annually on average. If you did that for 20 years, you would have invested a total of $24,000. But thanks to compound growth, your portfolio would be worth around $52,000 to $54,000. That's more than double your money, and it didn't require any fancy strategy or a lot of cash. Now imagine what happens when you give it more time. Let's stretch that timeline a little further. Now even this time, let's say you invest the same $100 a month and you get the same average annual return of 7% per year. However, instead of 20 years, you stay invested for 30. Here's what would have happened over this time period. You would have invested a total of $36,000, but your money would have grown to $121,000. That's 3.5 times your original investment just because you gave it more time to grow. And this is why I say it's not about timing the market, it's about time in the market. Now the earlier you start, the less you'll invest and the more you'll end up with. And here's where it gets even more exciting. If $100 a month can grow to 6 figures, imagine what would happen if you start investing $500 to $1,000 every month. Now you're looking at hundreds of thousands or even $1 million or more over a couple of decades. And that's just with passive investing. That is putting your money in an index fund and letting it grow. But here's the thing to remember, that this 7% annual return that we've been discussing is the average annual long-term return of a passive index, which is not bad. However, active investing, which is selecting individual stocks or other cash-generating assets with intention, has the potential to generate far greater returns compared to passive investing. But this does not happen overnight. You see, to become a successful active investor, you first need to learn how to read and analyze financial statements, understand how companies operate across different industries, know how to value companies and other cash-generating assets based on their intrinsic worth, recognize competitive advantages, study macroeconomic factors, and be able to control your behavior and emotions, especially when markets get volatile. Now remember, it can take a few years to build this skill set, but the reward is financial independence, confidence, and long-term wealth on your terms. So, if you're someone who wants to become a smarter, more informed investor, then I'm here to help. You don't need to go the distance alone, because the journey might be overwhelming at first, but with the right guidance and mindset, it can become empowering. So, let's learn and grow together, one smart decision at a time. And finally, hit follow and subscribe and take the first step towards becoming the investor that your future self will thank you for.